We start off with breaking news on the Fed and new fallout to that stock trading controversy. Let's get to Steve Leisman with all the details. Hi, Steve.
Melissa, thank you. Two Federal Reserve presidents who were the subject of a conflict of interest controversy at the Fed announcing plans to retire today on the eve of Fed Chair Jay Powell's testimony before Congress. Dallas Fed President Robert Kaplan saying he will retire October 8th. His financial disclosure showed multiple multi-million-dollar trades throughout the year in individual stocks that some said created the appearance of a conflict of interest. Kaplan, who headed the bank for the past 6 years, insisted he did not violate the Fed's code of conduct. The former Goldman Sachs executive said, quote, "The recent focus on my financial disclosure risks becoming a distraction to the Federal Reserve's execution of its monetary policy." Boston Fed President Eric Rosengren saying he would retire September 30th. Rosengren, he's headed the bank for the past 14 years, said he would step down for health reasons. He announced he is a candidate for a kidney transplant. He had planned to retire in June 2022. Disclosure forms showed Rosengren made 37 trades in REITs that own mortgage-backed securities. Last year, the Fed was buying billions of dollars of MBS. Powell may well face questions about these conflicts tomorrow, including his own ownership of individual municipal bonds, which he owned before the Fed last year began buying munis. In his testimony, Powell will say that he sees upward pressure from supply bottlenecks. They've lasted longer than expected, and there is potential upside risk to inflation from these bottlenecks and other supply constraints. The Fed would respond to higher sustained inflation if it became a serious concern, Powell said. On the economy, he says he will say it's continued to strengthen and strong growth is expected in the second half of the year. In some industries, he said, supply constraints may well restrain activity. Labor market conditions, he says, have continued to improve. Melissa?
Steve, September 30 seems like a key date because that was a date by which they pledged to sell their holdings. Is that correct?
Yes, both Kaplan and Rosengren, in the wake of the controversy, announced they would sell their holdings and not trade as long as they were presidents of the Federal Reserve banks.
Tim, you have a question?
Steve, it's Tim. Yeah, I guess the question really is, what's the sense within the ranks that there are others? It's been clear, the statement has been, there have been no infractions in violation of Fed policy. Powell has gone out of his way to say we have to evaluate Fed policy because the public trust is critical to maintain. So what's the sense? Are there others stepping forward?
Not that we've seen. We have reviewed, I think, all of the disclosure forms for this year. We did not find anything that stood out as creating the appearance of conflict. Most of what other Fed officials own seemed to be in different mutual funds and not in individual named securities. Look, it's an argument or a debate as to whether or not Kaplan or Rosengren violated the code of conduct. Certainly, you could argue that they created the appearance of a conflict of interest, but the actual rules say they can't take stakes in financial companies, companies the Federal Reserve regulates, and can't trade in the blackout period, which is 10 days before until the evening of the second day of the Fed meeting. So those are the rules that are the letter of the law, whether or not the spirit of the law was violated. And the question becomes about two other folks. Fed Chair Jay Powell owned municipal bonds before the Fed began buying them. Tom Barkin of Richmond owned individual corporate bonds before the Fed started buying them. I'm sensing perhaps some less heat on both of those than on Kaplan and on Rosengren.
Steve, what's your sense of the optics of this situation now that the two men who are at the center of the controversy are voluntarily stepping aside?
I think it takes some immediate heat off of the Fed. Perhaps. I don't know that it solves the problem. Powell has pledged to do a thorough review and revisit what the code of conduct says. I think that the Fed, and I think this is true of all aspects of power in America today, they face a crisis of confidence. I think the Fed probably got caught with its code of conduct not changed while the Fed's monetary policy execution changed. I think Powell said it last week that, hey, any Fed official could own muni bonds because the Fed would never buy muni bonds. Well, guess what? The Fed started buying muni bonds. The Fed started buying corporate bonds. Back in '08, before '08, the Fed had never bought mortgage-backed securities. So I think the execution of monetary policy changed. The Fed's code of conduct did not change. I think Powell's going to have to respond to that. I think the pressure is going to be on him to do a thorough look to really answer Tim Seymour's question officially, which is, were there any other trades that are at issue here? And should the Fed dramatically change the trading policies that govern Federal Reserve officials?
Steve, it's Karen. Thanks for being on. Do you think that Chairman Powell can put this behind him quickly enough so that it doesn't become an issue in whether or not Biden names him to continue as chair?
That's a great question. I don't know the extent to which Congress is going to make this into a major issue. We know there are elements of the progressive part of the Democratic Party that seem to want a different Fed chair for a whole host of reasons. They want him to focus more on climate change. They want him to perhaps pursue a more wide open monetary policy than he's already pursued, even though I would say that policy has been relatively wide open. This could be a wedge. I would point out, Karen, that it's well to say that it's unclear that the extent to which Congress has a moral standing to wag its finger at the Fed. In some cases, they have conflicts that are much worse than anything at the Federal Reserve.
Steve, great to see you. Thank you so much.
Thank you.
Steve Leisman. I'll go to you, Guy. How big of a problem is this, if it is, in your view?
I don't think it's a problem. I mean, in terms of what it's going to do to markets. But allow me to say this, without getting too hyperbolic. We trust these men and women. We trust them because of their judgment and their ability to make smart, intelligent, well-thought-out decisions. And quite frankly, the fortunes of the next decade, 15, 20 years, ride on a lot of decisions they make. The fact that, again, I'm sure within the letter of the law, everything they did was fine. I get that part. But the fact that while they were embracing and pushing the buttons for these trades, it didn't dawn on one of these guys or gals, quite frankly, that, hey, you know what, this might not pass the sniff test. It's legal, it's cool, it's within the bylaws, all those things, but maybe I shouldn't be doing this, and maybe I should bring this up on my own, and maybe we shouldn't be going down this avenue. The fact that that didn't just dawn on them immediately speaks to me in a lot of ways. You got to start questioning their judgment. I mean, because quite frankly, that would have been the first thing I thought of. So is it going to affect anything? No. But does it speak to a much bigger problem? Absolutely, yes. And just let me say this. I think everybody understands that I am no fan of the Federal Reserve, so it's important to get that out as well.
Yeah, that's true. But Karen's point, though, was a very cogent one, if I can use that word, in terms of how this could affect Powell and the reappointment of Powell, and that could in turn move the market. Certainly, Dan, I don't know what you think about this.
Yeah, no, I agree. If you think that the Fed and their policy is one of the most important inputs to just the price action that we see in U.S. equity markets and related assets, then any uncertainty about who that Fed chair is going to be, and then all of these governors that seem to be resigning in droves, that's probably not great for markets in general, especially when, people like Guy are out there saying that at some point, there's going to be the Fed's painted themselves in a corner. This is not the sort of mess, I guess, that you would like to see a whole new cast of characters fix. You'd like to see that they broke it, they kind of bought it here.
Does this throw doubt on the judgment of the Federal Reserve, Tim, especially as we enter this crucial period in which the taper may start as soon as November, when rates may start going higher, when we're exiting, what has been the major driver of the markets?
No, I don't think the Fed's judgment, and this goes back to, again, the trust and the commitment that look, these folks have shown for not years, but decades in some cases, at least in the Boston Fed's case. So I think the judgment factor, we have to believe, is intact. The credibility of our Federal Reserve is not only crucial for our country, I think it's crucial for the world. The independence of the central bank is something else that I think we've worried a lot about over the last couple of years. Different issue. Especially at a time when the Treasury Secretary used to run the Fed, and it seems like there's a very cozy circle between Treasury and Federal Reserve and Washington, which I don't love. And I think you have a case here where, again, I think we want to believe that the judgment factors never come into question. I think there's some people that are going to want to see those trades. I mean, how much money did they really make? How good were those trades? I mean, I think those questions are going to come up still. And I think they probably should. But I don't think the Federal Reserve's judgment is in question, and it's never been a more important time for us to understand that the Fed is some of the most talented people in the room and are making decisions not by the seat of their pants, and they're being very thoughtful and I think are not making decisions on a dime, which frustrates some people as they look at inflation. But I think the Fed is moving slowly.
And I wonder if we'll ever get that answer in terms of how much did they make off the trades and when they, I mean, we probably won't at this point, Karen, but full transparency may help when you think, and I had joked with Steve Leisman when this story first broke that knowing the direction of rates or having a sense of the direction of rates or how firm the Fed was and resolute the Fed is in terms of holding rates low, that's the keys. Those are the keys to the kingdom when it came to deciding what you would invest in of late.
Sort of. I mean, if you look what happened, I thought the Fed was a little hawkish this time, and the market seemed to really like that. I don't know. So I think you're likely to have some inside knowledge, but not necessarily. I actually want to give all of them the benefit of the doubt that they did the right thing. I think that people who serve on the Fed really do a service, and I think that they could probably make more money doing something else would be my guess. Looking at Powell's own holdings, it looked like he owned not a significant position in munis. That what was he going to do, buy or sell or hold? I mean, he's under question. So I really don't think it should matter nearly as much as the massive job in front of them, which I think they've done a good job laying out, which is how do we get out of this? And I think they've done a good job telegraphing that we're going to start getting out.